Hey guys, welcome back. It's June 17th, 2026, and right now Microsoft is down almost 4%. And while the broader tech indices took the FOMC event a lot less poorly, Microsoft broke straight through key technical floors, slammed down to an intraday low of $377.32, and is completely lagging the market. So if you're just looking at a standard chart, it looks like an absolute disaster. But while retail traders are panic selling and cutting their losses, the smart money is putting on an absolute masterclass in market maker manipulation. Under the surface, a massive options campaign is literally pinned Microsoft into a coiled spring right at its weekly 200 moving average. And quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and thank you to everyone who's subscribed today. I really appreciate it. So thank you so much for everybody. I really do mean that. And if you haven't subscribed, please do. It makes making these videos worth it. Leave a comment. I get back to everybody. All right, before we jump into the actual review I want to do today about order flow and smart money and accumulation, I just want to do a quick recap of the 4-hour chart and the daily chart, just so you could see that today's move wasn't as bad as it could have been or should have been prepared for. So I talk about pivot points all the time on my channel, and the pivot points that I calculated at the close of yesterday based on the 4-hour, including extended session, is 375, and that was the lower bound. And so not hitting that is actually a data point for me that I like to have in mind. And I was also prepared for that eventuality. But you also may see that we came down exactly to a fib. So I know these moves felt absolutely horrendous if you're in Microsoft. Again, this is not financial advice. This is my position. And do not emulate my positions. That's not what I'm telling anybody to do. That's for you to figure out on your own. But for me, this is not a large part of my portfolio. It is a large investment, but it is not representing a significant portion. So I'm able to ride this out longer. So that is one part of this trade architecture, is that I'm able to wait it out. I do have options overlays, and those I will be cutting much sooner if things don't play out a little bit better sooner. But I have an allocation for how much I'm willing to lose on those options before I decide to cut them and maybe reinstate them if we reclaim some levels. But anyway, that's just a little housekeeping, because this is not financial advice. This is my position. And so if we see it on the 4-hour, it wasn't as bad as you could have thought it would be. And also on the 4-hour, you can see these nice wicks that are coming on this fib here. And so the interesting part about that fib is on the daily. And so I'm going to go back to the daily now, and we're going to see two things that are important. So if you've been following this, we talked about these gaps over here. And the first gap was closed relatively, I don't know, at the end of last week, mid last week. What is that, like on the Thursday? And then on Friday, we touched down into this gap again. But today we actually filled that gap. So that's not the craziest part for me. That is somewhat normal. We marked out the low on the 52-week up to the swing high here. And you can see that we've come back down to the 786 the 786 on the fibs. So that's not particularly weird. And then if we actually look at this on the weekly, I think everybody should know roughly where we are, which is the 200 SMA on the weekly. So now I'm going to dive into what I've wanted to actually talk to you today about, but I just wanted the framing for the higher time frames. All right, before we look at the slides I put together today, let's define our tool set. So most retail traders only look at price history, volume, support and resistance, basically anything that you can put on your chart. In your standard charting software here. But today we're going to look at real-time order flow and gamma exposure data. And not even, like the order book you'd be expecting, or L2. We're going to be looking at time and sales, and we're also going to be looking at trade flash. Because on a day like today, when there's a crazy amount of volatility, I'm really interested in what the institutions are doing. And so the trade flash and time and sales that you can see here on Thinkorswim, and you probably have them in other trading softwares as well. With those, you can peer directly into the dark pools and institutional clearing houses as they get reported. And so this lets us see these massive equity blocks and option sweeps. And so on a day like today, like I said, it's very important to see what they're doing, especially around these key levels. So now let's jump into these slides, because as you can see, there's nothing going on in the time and sales. Trade flashes are done for the day. But I started taking screenshots across today in preparation for making a video for you guys. For me, there's a big rule about never reading order flow in a vacuum. You really got to anchor large block trades to higher time frame technical levels. So again, on the weekly chart, we want to ground it there. And that white line is the 200-day simple moving average. And that's the ultimate institutional line in the sand for sovereign wealth and pension funds. And back in March, Microsoft printed a classic false breakdown spring to 356.38 right here, before rapidly snapping back off this exact moving average. And today we came back down to kiss that exact level. So we were watching that closely, and it's not uncommon common to, once you reclaim the 200, to come back down and test it on lots of different time frames. But this is a critical level. But then what happened is that at 9:03, and now we're getting into the order flow data, and this is from the trade flash alerts, which let me show you here what they look like. I have popped out the widget. I'm filtering for Microsoft, but they essentially look like this. But if you, and just show you large trades essentially. If we look at Microsoft here, down here at 9:03, and I've coded it into my presentation over here, and this is what it looks like a little bit bigger. But at 9:03, I saw a large transaction. The math on this works out to be $395 million, so almost a 400 million long-term position. And I say long-term because this is not kind of thing that you're scalping. And so this, was legally crossed and cleared as a buy side. And so that's our anchor. There's a whale who wants to own the stock at $386. And so why on earth is it trading down into 381 later in the day? So let's jump into the next slide and see what else we could understand from this. All right, so unless you were under a rock or not trading today, you know that today was the FOMC. The Federal Reserve held its rates steady, but a highly hawkish dot plot panicked the tech sector. And as you can see on the slide here, Microsoft collapsed. You can also see it on the chart there. Microsoft collapsed through its intraday S2 level right here and triggered a massive stop loss cascade. And that's kind of what you can see here, just these fat candles to the downside. And we came down to a low of $377.32. But if you look at the volume there, on the chart, we saw a massive vertical climax spike over to 41 million shares. And that was roughly around at this point. This is actually at the end of this trading session. And we'll talk about that in a second. And so that's institutional absorption of retail panic. But the real reason that Microsoft stayed down while the QQQ recovered, because if you look at QQQ, I know it's down now, but a lot of this cascading happened here, and QQQ caught a bid back up. It did dump towards the end of the day, but it's also coming back up, which we will talk about. But Microsoft didn't have any of that recovery pop. And so at the time I was working on this script here, that was very interesting to me. And I wasn't sure what way the Qs would finish, but I was more interested in what was happening to Microsoft. So this is where we start to look at time and sales. And between 11:43 and 12:03, a massive institutional entity repeatedly bought multi-million dollar blocks of deep in the money puts at 420, 425, 440, 450 strikes. And because these puts are so deep in the money, they carry a delta of near -1. And so what happens there is when an institution buys puts of this size, it contractually forces option market makers to go out and short millions of shares of the actual Microsoft stock to stay delta neutral. And so this was an option engineered suppression, and the whale literally forced the market making computers to dump the stock to pin Microsoft down. And the next thing to notice was a little bit later, I could see that they started closing some of the puts. They were actively rolling and rebalancing their risk. Essentially, they weren't just buying puts. They sold back over 10,000 puts at the 420 strike to harvest the profits on the drop, and then instantly bought over 12,800 puts at the 425 strike to re-hedge. And so it's really interesting because it's not real. This dual hedging confirms that the whale wasn't dumping their core long positions. They were dynamically balancing delta and volatility, which is something that tells me that the fact that they bought all of that, they weren't dumping the shares. I didn't see that happen in the tape. Instead, I saw that there was hedging, but they wanted to keep the core position. All right, now let's look at the ultimate options plumbing. If we look at the top panel, this is Wednesday's expiring options because there was options expiring today. If we look at that, so it's June 17th. So this is the read from that. And then the middle panel is the read for tomorrow, which is actually the end of the week. So if we look at this top panel here, which is expiring tomorrow, like I said, it's net negative GEX was successfully pinned today at 381. And we were right here, right above this, this put wall that was forming over the course of the day. And so that block expires tonight and rolls off the board. And now if we look at the middle panel right here, tomorrow, Thursday, June 18th, is a shortened week. So that's the weekly expiration, as I said. And there's a massive towering wall of net negative gamma sitting between 375 and 385, which we're right in between, we're trapped between those two, representing nearly 500,000 shares of short market maker exposure. And here's the magic of tomorrow's setup. So if you look, let's go to the next slide here. As we march towards the closing bell tomorrow afternoon, every single one of these expiring weekly puts is going to expire or get closed out. So the second these puts clear the board, the market maker's requirement to hold those millions of short shares completely vanishes. And this triggers a massive de-hedging cascade. Market makers will be forced to aggressively buy back millions of shares on the open market, releasing the spring and launching Microsoft back toward that 386 whale buy anchor. And that's just, if I'm reading this correctly, again, none of this is gospel, and again, none of this is financial advice, but this is what I was watching today about these different stages that happens. You know, you have the pin stage in the morning. As long as these deep in the money puts remain open on Thursday morning, market makers must keep millions of shares of underlying stock shortened. So in the morning, we may not be hitting a huge pump or anything like that. I'm not necessarily expecting it. And then the expiration cycle in the afternoon, as those puts approach expiration tomorrow afternoon, the market maker's requirement to hold short stock hedges completely evaporates. And then the short squeeze, to unwind their short hedge position, market makers must aggressively buy back millions of shares on Microsoft, and so that could trigger a rapid rocket ship rally back towards the 386 level, which isn't much actually. Now we have been pumping up in the aftermarket. So that's really quite an interesting phenomenon that we're seeing playing out here. All right, so now I want to talk about the Thursday playbook for me. So it's going to be a lot of watching, of course, and just want to mention this, that I have a number of different plays. Again, this is not financial advice, but for my long-term shares, do you think I actually care if I'm buying them at 382 or 385 or 400 or even 415 really? No, because my thesis in the 5-year is that it's going to be a stock that is well over $500 or $600. So the small oscillations around here don't really matter for my long-term portfolio. I'm not going to cut them because something's been invalidated. Then I'll have to look at it differently. But I do have options overlays and some leverage plays going on. And those are the plays where this thesis is what I'm monitoring. So the levels that I'm looking at here for the invalidation is if we have a daily break below that 375, it might open the trap door down to 360. And if we saw that on the daily, that would be right around here. And it would be a totally different assessment. I'd have to reassess because we'd be hitting a double bottom. Do I want to be a part of that? Is it actually the head and shoulders people worried about on the weekly? And then if it breaks down, so it's a different assessment there. But for today, that's the level that's going to change the way I'm thinking about the current trade, specifically around the 200 SMA on the weekly. And then the confirmation that my thesis for this Wyckoff accumulation is that we need to reclaim 385 to 386 and hold it on the hourly. And it'd be much better if we hold it on the weekly. I'm going to feel great. If we close above 390, I'm going to feel even better. And if we just look at it on the 15 for a moment here, we could see that it's already starting to kind of grind, I guess, upward, if you will. I think what's happening here is a lot of other people are aware of what I'm seeing, which is that a lot of negative GEX is going to roll off tomorrow and market makers aren't going to have to hold this. And if they were looking at the tape, they may have seen that huge institutional order that came in at 386, which is going to act like a magnet. Plus, a lot of times those 386 buy or those huge $500 million orders aren't the full thing. And so maybe they're picking up some around here. As well. So I would not be surprised at all to see that. So that's kind of like the Thursday playbook there. And, if I actually, we already talked about what I think is going to happen, how that cycle is going to play out, but I am going to step back and watch some of that play out. Although I will say I will have a bullish leaning thesis depending on how GEX is morphing in the morning, because I'm watching this, and as I see the GEX roll off, if we're starting to go over the gamma flip lines that develop and I see some more trade flashes, I might start running some algos to scalp the day or look to add to some of my positions. Well, thanks so much, guys, for watching. Please do let me know if you like this kind of order flow video. It was very difficult to make on such a crazy day, but I saw that trade flash come through. I really wanted to do this, but putting together a presentation same day that I'm trading it, I hope it wasn't disjointed in any way, but let me know if it was helpful. I'll do more order flow videos, time and sales, trade flash, that kind of thing. Of course, we're putting in more GEX stuff because everybody wants to see that, and it is really a pillar of my own trading and algorithms. Thank you so much for everybody who's subscribed. Please let me know if you want more videos like this, if you'd like daily recaps instead, and leave in the comments what tickers you'd like me to cover. Somebody asked if I would do something similar today about this, so that's why I did it. Thanks so much. Please subscribe. It makes these videos worth it, making these videos worth it for me. Happy trading. Stay safe out there, and I'll see you tomorrow.